If you're thinking about buying or selling a home in San Antonio, there are a few questions you're probably asking right now. Are home prices still falling? Are buyers finally getting the upper hand? Why are some homes sitting on the market while others are still selling pretty close to asking price? And with inventory now approaching 6 months, are we moving toward a buyer's market or are we starting to see things level off? Well, now we have the July numbers, and there are some interesting things happening underneath the surface. On one hand, sales are slowing, homes are taking longer to sell, and we're still struggling to get through enough homes under contract. But on the other hand, the number of homes sellers are competing against is actually a little lower than it was this time last year. So there are some mixed signals here. And whether you're buying or selling, I think there are some opportunities in these numbers that you need to know about. So let's get into the August San Antonio housing market update and take a look at what happened in July. Okay, we are viewing all the market data here in San Antonio for the month of July, and we are now in August. So this is the August housing market update, and as you can see, we are smack dab in the middle of a balanced market in San Antonio proper that equals 5.87 months worth of inventory, so almost 6 months worth of inventory. We saw a slight uptick in inventory, 1.9% month over month. We saw our sold to list price percentage down about a tenth of a percent. And this still bodes well for sellers that are priced properly. So you're looking at getting roughly 97% of your asking price if you come out priced correctly. And the typical days on the market for a home selling right now is about 47 days on the market. That is up a little bit, almost 12% month over month. And our typical home selling in San Antonio is selling for about $295,675. That's down a little bit month over month. It's 4.62%. Next up, newly listed homes. This is important for judging what the market's going to look like in the next month or so. And the number of properties that were just listed in San Antonio in the month of July came out to 2,867 properties. That is down 4.1%. That's normal for this time of year. As you can see here, we start tapering off after May every single year, or right around May each year. We start tapering down in the number of properties that are listed. So July is really right on point with that. The typical home that was newly listed in July came out to $295,499. Active listings. This is a super important one because this is where all the pressure for sellers is coming from to lower their price. You have a lot of competition, this active listing pool. These are the homes that are not selling. They're still on the market after 10, 20 days. And we have 9,678 properties for the month of July that were still active. Now, a bit of good news, though, is that this is good news for sellers. Sellers have just a few less homes this year to compete against in San Antonio versus last year, same time. Now, last year we peaked in August at 9,820 homes that were active. So we'll see what that looks like at the end of the month, August. But so far this year in July, we're actually down a couple hundred homes. We don't have as many homes active this year as we had last year. So that's great news for sellers. It just shows that the momentum of the number of active listings has slowed and possibly tapered down. We'll see how that holds up over the next couple of months, if that's going to be a trend. We could see some reversal in the market at some point. So that's just a small data point you want to keep an eye on. And newly pending listings, another very important data point that shows that we still have some work to do, though, on the front end of this. We're looking at the number of properties that went in under contract in the month of July. Okay, they've gone through the inspection process. They are now pending. They're looking at the closing table. 1,524 properties newly pending in July. That's a 16.1% month over month decrease in pending home sales. It is a seasonal thing as well, but as you can see here, if you're looking back from 2021 all the way through 2026, we're still on a downward trend here for pending listings, so that's not good news for sellers. What's encouraging is that we seem to be hugging this line here, this 2,000 units line here. And you still keep hitting that thing year in and year out. Whether or not we see a reversal here at some point, it's possible. Next year we'll see this tick up a little bit, but for now we're still in a downward trend overall, mainly due to interest rates of that nature, affordability. But keep an eye on that as well. Pending listings, these were already under contract in July and pending. Again, 2,127 pending listings. Still see that downward trend here. So keeping an eye on both, pending and new pending listings gives us that early indicator right after mortgage applications what direction the market's heading. And as you can see, we're still struggling here to get homes under contract. That's where we're at with that. Sold listings, again, one of your last metrics here. This one here, we're coming in at 1,735 properties that were sold in the month of July. That's down 7.3% month over month. Not what you want to see as a seller. And a buyer, well, you have options there on the table, homes that are available. Not as much pressure right now to make quick decisions. So if you are a home buyer and you're looking for opportunities, this could be opportunity time for you in the market. Anything could happen, but right now it looks like if a buyer is out shopping and they really are looking everywhere and making offers, there's a lot of opportunity out there. That's what these numbers are telling me that as we're going over them. Sellers, if you're a buyer also, if you have your home on the market right now and you are going to be a buyer, look for every opportunity to find a way to get your home sold. Look at assumptions. Do you have an assumable mortgage? Are you advertising assumable mortgage? Look at offering rate buy downs instead of just cutting the price of the house. You may take a combination of both, but just a price cut alone, the head is more expensive than just a price cut and offering some incentives. I have a video on that showing you how that works, what it looks like, and it works for builders. So if you are a resale homeowner and you're not taking advantage of rate buy downs and using that to attract buyers, you are missing out on traffic to your home and making deals right now. And that's absolutely crucial. Get that going. Show the buyers that you're willing to negotiate, that you are up on the latest in attracting the buyers, because after your home is sold, you become a buyer and you can take those same tactics into purchasing your next subsequent home while it is slow, while the number of transactions out there is low. Okay, don't just think about the price you're getting up front, think about the purchase on the back end. And again here, month supply, finally we're looking at 5.87 months worth of inventory. If nothing else was listed today, it would take about that long to get it all sold, and we added about 1.9% last month in inventory for a total of 5.2% over the last 12 months. So what do we take away from all of this? I think the biggest thing is that you can't just look at that we have 5.87 months of inventory and say, okay, we're in a balanced market, and leave it at that. Because underneath that number, buyers definitely have some leverage. Homes are taking longer to sell. We have fewer homes going under contract. closed sales are down, and sellers are competing against more than 9,600 active listings. So if you're a buyer, this is the kind of market where I would be looking for opportunities. Look for homes that have been sitting. Look for price reductions. Look for sellers who may be willing to contribute toward your closing costs or buy down your interest rate. You don't necessarily have to wait for home prices or interest rates to come crashing down to find a good deal. Sometimes the opportunity is in the terms you negotiate right now. Now, sellers, that doesn't mean you can't sell. We're still seeing properly priced homes sell at roughly 97% of asking price. And one of the more encouraging numbers in this report is that we actually have slightly fewer active listings than we had at this point last year. I'm going to be watching that very closely, because if inventory starts leveling off while buyer demand eventually begins to improve, that could change the direction of this market. We're not there yet, but that's something we want to keep an eye on over the next few months. And if you're selling a home and then turning around and buying another one, remember what I talked about earlier. Don't look at those as two separate transactions. You may have to give something up to get your current home sold, but then you get to turn around and become the buyer in this same market. That's where you may be able to negotiate on price, closing costs, repairs, a rate buy down, or some combination of those things on your next home. So it's really about looking at the entire move and not just what happens on the sale of your current house. If you're thinking about buying or selling here in San Antonio and you want me to take a look at your specific situation, reach out to me. We can look at your neighborhood, your price range, what you're competing against, and where the opportunities are for you. And if you want to keep up with what's actually happening in San Antonio, and if you want to keep up with what's actually happening in the San Antonio housing market, make sure you subscribe, because I'm going to continue tracking these numbers every month, especially that inventory number. We're getting close to 6 months, and what happens from here could tell us quite a bit about where this market is headed next. I'll see you in the next one.